How's it going, everybody? Welcome back to another episode of Smart Money, Smarter Moves. I'm your host, Samir, Director of Freedom Family Office, and I am joined by my colleague, our Chief Investment Officer, Kyle Cain, who is the Chief Investment Officer of Freedom Family Office. And we try to come to you each week or within a month to talk about insights on the market. Just a reminder, nothing here we say is investment advice or constituted as advice from Freedom Family Office. It is purely educational purposes. I know there's a lot going on right now, and Kyle, people that might just be listening in, a lot of our clients are business owners, so they might be on the go, grabbing a coffee. We try to make these episodes quick. When I look at the headlines, I see a lot going on. I see markets are in correction territory. I see that there's issues with TSA agents, which I don't know if you can relate that to anything, but what's going on there with this partial shutdown? And Nasdaq is down 10+% from, I think Nasdaq's trailing even lower, correct me if I'm wrong, than the Dow Jones and the S&P. People are worried. I mean, there's one day you hear our president say that a deal is they're itching for it. Iran wants it more than ever. And then it looks like from the other side, Iran's saying the opposite. So walk us through what is happening.
Yeah, so it definitely is a interesting time, and it's of course it makes it really difficult to decide on a portfolio standpoint and what to do. Like you said, the markets have now more so this week sold off. We've had some down weeks, several weeks in a row, but it's the markets have been fighting. There's been this itch still of to want to buy the dip mentality that we've seen now for the taco trade and Trump chickening out and the market really is eager to buy some good news. So if we got something that all of a sudden happened, there was a ceasefire, or that Iran came out and said they would open the strait or let more ships pass through, we could see a big spike in the markets really quick in a day or so. Um, whether that's gonna hold or we got into what the actual implications of energy going forward, we'll talk about here in a second that that's hard to you know to make a decision to get out at this point if you haven't already made moves in the portfolio to protect, right? So the the S&P 500 is down about 7% this month, which is actually like the worst month we've seen since 2022. But we're still not down that much. Nasdaq went into correction territory, down about 10% or so. International, also over 10% since the started happened, since they get hurt worse. They're more energy independent, Asia and Europe. So really, how this impacts us is quite a few. Right? The main is oil. That's the overall driver in all of this, and liquid natural gas. But you start to think about what's happening, the timeline. And this has been going on now for over 4 weeks or so. The ships that were out there, it takes about 4 weeks, 4 to 6 weeks for the ships to reach their destination. So there was already ships out at sea before this escalated. So obviously the knowledge that the strait is no longer the flows coming through automatically pushes prices up. But countries haven't really been hurt too bad yet because they still had the shipment coming in that were overseas. That's now starting to dry up. That came, Asia was probably, um, the past week or so those ships would have already came there. So that supply has come in, and now there's no more ships coming in, transporting oil to them. Europe, Africa's next. Then Europe should probably be the last of the shipments in the next, couple of weeks or so. Our shipments that were coming to us, which is less than, needed, would be, later towards the end of April. And again, it's less impactful to us, but it still hurts us, right? The overall growth impact hits the consumer where, if we're paying more in oil prices and it, goes into transportation costs of goods, we're starting to see it in the PPI data, we're starting to see it in inflation. So, the markets are selling off for several different reasons. One just being that this is a growth shock, a supply shock, which is going to hurt growth at some point, going to hurt earnings. How much depends on, again, how long it lasts, right? And then the second point is interest rates. We've seen interest rates now move up considerably because of the concern of inflation. And the Fed had its meeting the other week. The still the overall dot plot shows one rate cut this year,
Right.
but there's been some Fed commentary and the amount that say no cuts, and still some that projected Fed rate hikes this year have gone up a little bit. So right now, the 2-year Treasury is trading at about 3.9, and if you can, consider the Fed funds rates only at 3.6 or so, that means that the markets are pricing in at least one Fed rate hike at this point. So obviously, markets don't like rising interest rates either. So, I guess the first thing I would say is that, yeah, what's going to happen in the markets? It's a really interesting scenario because we don't know how it's going to end. We don't know the off ramp. I think Trump does want an off ramp at this point in time. Um, but obviously we hear the rhetoric going back and forth. But it takes three parties at least. It takes Iran, takes Israel, it takes us to all decide and agree on something to get this thing to move forward. Obviously, we don't really know what's happening behind closed doors. Iran, of course, is saying they're not having any negotiations, but we know that there is some negotiations happening. Um, but it may take an escalation to de-escalate, right? And that's the scenario of we can't really control the strait unless we put boots on the ground and
Right.
actually, get there. And that could be the catalyst to finally let the floodgates go where individuals just say like, hey, this could take a lot longer now that we have boots on the ground. This could be another Iraq, another type of, scenario that lasts a lot longer. And then we see the market sell off significantly. But like I said, on the other flip side of the coin, if we get some sort of fix, it's going to pop quickly. So difficult, difficult environment to be in as an investor. And our portfolios, of course, as soon as it happened, I still was under the belief that it's a midterm election year. Trump's not going to want to escalate this too far. It is, again, it gotten a lot worse than I expected it to, but we made some moves, bought more into energy markets as a protection. We did sell out of some of our higher duration fixed income, moved into, to more cash, shorter term. We bought some more energy, not energy, some defense stocks, which, haven't done that well since it behind, but at least it hasn't lost. They're still doing decent. Um, so yeah, I mean, again, a lot to unpack in this environment and a quick call. But I guess my main advice to individuals out there is, put on hedges, but play both sides. Play the taco. Have a buy list of what the things are that are gonna recoup. Things have sold off really bad, like airlines and software. That's not related to this, but um, you know, yeah, I mean, there's quite a bit of sectors that have sold off tremendously here that could unfold. And same thing, energy could kind of drop real quickly once we see a resolution. So if you've been playing it, if you haven't been playing it yet, add some of those, higher for longer, um, energy higher for longer plays, but hedge it with a potential rebound if things start to get too cheap.
Let me ask you this, Kyle, before we close out. So, if there's a scenario where there are troops on the ground, the U.S. decides to go say, "Hey, we're going to take over the port of Hormuz," and it's I don't know, with how strong the U.S. military is, it might be a week-long operation. When you look at markets, when we put troops on the ground in Iraq, from the markets being down already 10+%, what would you forecast based on previous history on an estimate? Like, how much more could the markets go down should we go bear case and troops on the ground?
I mean, it's hard to say, right? Because there is the King Island, that's where a majority of everything comes through. We could probably control that relatively, I don't want to say easy, and I'm not a military expert, but we could probably secure that, and that would be a good negotiating leverage. Um, but ultimately, would we be able to stop? It's really on the either side of the Strait of Hormuz, it's really rocky, and there's plenty of places for them to hide and have undercover, underground bunkers and things like that. That they could continue to attack. But then they have their, Hezbollah, which is on another, they're protecting, or they're basically ready to strike another important oil transport pipeline. So if we do put boots on the ground, it's really hard to see that, you know, it's hard to see how they could play out. I would imagine that that would be a significant escalation that would still, we could use it as a leveraging point to make something happen. But if Iran's completely refuses to negotiate, it could drag out for months and months.
And would you put it past us? Again, not investment advice that we could enter bear territory, 20%?
Yeah. Yeah. I mean, so, right, like I said, there's different layers to this. On There's already been some significant infrastructure damage done, right? Trump has put now on, basically threatened to attack all of Iran's energy sources for both power, but also, gas. And the thought there is if all of a sudden we start attacking infrastructure, oil goes up, it easily goes up to, 170, 180, 200 barrels. No, there's never been a point in time that there hasn't been a recession when oil's gone up that high. Even though we're less dependent on it, that would likely be the case again. So yeah, if, there is easily a recession scenario here to be had, I think, again, cooler heads will prevail. We'll be able to prevent that. We still have, again, remember, we still have benefits here in the US, the one big beautiful bill, being a positive to offweigh it. So again, as long as we can have a scenario where Trump and Israel have already said they've won, and if we can just get someone, Iran, even though right now it's mainly the military that's running things, if they can just at least have some negotiating to open up the strait, we should see oil prices fall and, a continuation of the global growth story. The other thing that, I want to go into is too much on the negative side here is that also the other thing that a lot of people aren't considering is, right, we did have coming into this year the notion with the tariffs and the idea of other countries doing big investment into the U.S., right? There was, Saudi Arabia, UAE, they all, made commitments to invest quite a bit here in the U.S. Well, now they're being hurt financially if they can't export their oil through the Strait of Hormuz. They're probably aren't going to be able to live up to their commitments. So that's another sort of negative for the U.S. that not many individuals think about if this thing drags out. So, long story short is, yeah, there is a recession scenario here. We could easily get 20%, sell off or so. That's where you want to play defensive. You want to play, but again, where do you hide? Um, Gold hasn't been playing that role, here since the attacks happened because it was already ran up too much and it's more of a positioning and flows. I think the sell off that we saw the other week of gold, about 10% or so, is probably a good entry point for those who don't have it, to start considering it if that hasn't been an overweight position for you. Bonds, I don't think the Fed's going to, to hike this year, regardless of what the oil scenario is. They may just hold, or we could get a hike. So the 2-year looks pretty attractive to me at the 3.9-ish or so range. But the long term may not be that buffer for that much of a buffer with just the way the supply dynamics are, supply demand dynamics are. So, in a recession, the Fed would cut. That could help on the 10-year. But my point being is the only way to play it really is with some energy hedges, some defensive positioning, but being ready for, if you're not already playing it, be ready to have your buy list for a ceasefire type environment.
Thanks, Kyle. And in 10 seconds here, the last question, since we're both getting off here, is when do you expect airports to go back to normal? Are we going to make a deal with TSA agents soon?
That, that I don't know what the Senate, I guess, approved
Rejected
the
something.
funding.
They
So
approved something. I thought I saw something rejected a few hours ago.
they might as well. I know the Senate passed it to fund everything except for ICE, which would let them go back, but then went to the House. So I don't know if the House rejected it or moved on. I would imagine some sort of deal has to be worked out to, to get that back to normal, and it probably will look something like that. They'll just carve out funding for ICE and then kick that can down the road a little bit.
Perfect. Well, thanks, Kyle. We will see you guys back for another episode of Smart Money, Smarter Moves. If you like this content, subscribe, check out freedomfamilyoffice.com, and always feel free to fill out a contact us section to learn more about us. Thanks, Kyle.
Thanks.